And we're hour 3. By the way, you can listen to us over the internet. LarryKudlowShow.com, LarryKudlowShow.com. And by the way, visit us during the week. Fabulous Fox Business Network, FBN. 4 to 5 p.m. every day, Monday through Friday. The name of the show is Kudlow. Please dial us in. If you can't make it at 4, just text your favorite 9-year-old, and she will show you how to DVR the show, and you'll never miss a thing. And we got 2 aces on the stock. The stock market's kind of wobbling around, not doing much one way or another. Lost a little bit of tiny ground this past week. Maybe the NASDAQ got hurt a little more than the others. Let's bring in our experts, Pete Najarian, co-founder of Market Rebellion and Option Monster, and Kenny Polcari, chief market strategist at Slate Stone Wealth. 2 great guys. So, Pete.
Yes, sir.
I'm looking here. Where is it? VIX. 19. Big deal. Nothing much going on there. I heard a lot of, it's so funny. I always glance at the papers in the morning, and everybody's trying to make a case, bad case, oil prices, this, Fed, that, overinvestment in AI, chips, sell software, blah, 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 blah. But the market, I don't know. The market's just kind of holding a level after a big increase. I don't know. How do you see the story?
I see it as this. It's an unbelievable market that's had an incredible run up to all-time highs, and we are right pushing up against those all-time highs for the most part, even with the NASDAQ, with the shifting that we're seeing. And it's about this very healthy rotation. And Larry, you know it. You've been around the markets a long, long time, and so have I, and so has Kenny. But the reality is, you're going to have big runs out of something like the semiconductors, the SMH, and you're also going to have some pullbacks at times because maybe they've gotten a little bit too far too fast. But the reality is that this rotation has been very, very optimal. And I think people are understanding that it's a real strength, I think, that it's not just always going to be the semiconductors that are leading. Sure, they're of huge influence of the NASDAQ and so forth, but the reality is that, it's something where you look at a Micron and, it's down about 12% in the last month, but how much was it up previous to that? Enormous numbers is the answer. And Lam Research, sort of the same thing, down about 18% in the last month or so. And, you look at the AI world and so forth, and I think one of the things that we all are watching very closely, of course, is because of the reaction is almost immediate, but the price of crude. A month ago we were trading 68. Here we are up about 28%, closed around 90, let's call it, for WTI. And that does have an influence, a huge influence, because that influences airlines, shipping, trucking, cruise ships, all of that, ag, food, everything. And so, there's going to be some moves there. But, if you take a look and just stand back and you see the media wants to say something totally different. They have the narrative to say, and it's because of the leaning that they've got. But they really, when you look at it, the economy's falling. Everything's coming apart. Well, unemployment didn't say that to us, did it, guys? The last week it was the lowest in 50 years. 1 in 1,000 workers is filing for unemployment. So when the media is trying to push this narrative to us, I think we all have to step back and say, you know what? That's wrong. This is what's really going on, and it's been a very healthy rotation between healthcare and energy names. And, you just go through this whole thing, and, that's why we're very much hugging right up against where we are right now, which is all-time highs.
Kenny Polcari, the Mag 7, I guess, lost some ground, as Pete suggested, some of these names. But again, it's off of a huge rally.
Yeah.
I'm just looking. Look, you're still. Let's see. The S&P 500 year to date is plus 8%, 8.3%, and I'm looking at the. Let's see. The Russell 2000 smaller caps up 18.1%, and the Dow's up 8% too. I don't. I mean, is this bad? Is it just? How about if you're consolidating close to the highs, forming a bottom? I hope. That's a bullish thing. At least if anybody has any patience, Ken Polcari. Anyway, Pete, I'll just continue our conversation. I mean, if bottoms are forming at very high levels, I mean, I don't see any. These reports on profits and revenues are generally still very, very good. Consensus forward-looking S&P 500 earnings are over 20%. I mean, I look at Ed Yardeni's stuff every day, and he charts that and tracks that. It still looks pretty strong to me.
Given the backdrop, Larry, right? I mean, when you look at the backdrop and you see tariffs and you see the Iran tensions, and that's been ongoing for quite some time now. But, as we've been talking about for over a year now, when you really look at what's going on that way, and then all of a sudden you go right back to the earnings that everybody tells us, well, we're too far in front of ourselves. The earnings all I see are earnings that are crushing it. And I don't mean just beating, I mean crushing it. And yet the narrative again that we hear from people is, well, that can't happen. It's not going to happen. And each and every quarter we see this, and we see just unbelievable numbers. Now the reaction wasn't as great. There was some movement, but you look at Intel. Initially, it jumped up all the way up to 112 a share or something like that. It pulled back, but we look at that. We look at a T-Mobile. We look at the rails, who, by the way, that's an area that doesn't get talked about nearly enough because they've been actually on fire as well. So I look at all that and I say, for all the negativity that I seem to hear, I'm looking at the S&P 500. It's just off of its all-time highs. It's literally just off of it by less than 100. So here we are, and yet we hear this same thing day in and day out, that things are not as good as the market's telling us. Well, I like to look at the markets and see those numbers, and if those numbers add up, it sure makes it look to me like things are going pretty well along with the economy.
Dow Transports year to date up 29.5%. 29.5%. Wait a minute. The SOX index, semiconductors, year to date are up 66.9%.
Okay. Right.
That's a pretty good rally, Ken Polcari. I mean,
right. I was starting to tell you guys, that speaks exactly to the point that Peter made, right? Some of these names are up tremendously. I mean, the stocks are up 69% right now. They were up 80% or 80% plus year to date. So it was a tremendous move in those names. So to see them pull back should surprise absolutely nobody. And the other point that Peter made was the word rotation, not liquidation, because if we start to see liquidation, we'd see them selling everything and throwing the kitchen sink out the window. They're not doing that. Their money's coming out of some of these overperforming high-tech names and being moved into basic materials, healthcare, even industrials, utilities. All these other sectors are seeing money move into them and out of maybe some of these high growth names, which isn't necessarily a bad thing. To Pete's point, it's very healthy. People should welcome that.
Industrials up 17.7% year to date. Materials, commodities up 11%. Now, energy leading the pack up 33%. Iran war, I understand that, but still, it's a pretty good look. Ken Polcari, let's just talk bonds for a minute. Bond prices falling. Yeah, yields up a lot this week. T-bills, 3-month bills up 11 basis points, 390. The 2-year note up 16 basis points, 433, and the 10-year note up 13 bips, 468. So, what do you make of all that?
Well, so the 10-year, the one that really everyone looks at, really kissed 4.7, I think, on Thursday or Friday.
Yeah.
And so that makes it, that certainly does add to some of the pressure on stocks because people will look at that and think, the risk-free rate, 4.7%, not so bad if they're nervous. I'm a little bit concerned if we keep seeing it push higher. I think that's going to certainly put pressure on stocks. If we see it, really pierce into the 4.7 range, then I think you'll get more pressure downside. Certainly on the high growth names, there'll be more pressure on those names. But I think you'll see that money again rotate into the more defensive names. So consumer staples, I think we'll see a bid if that happens because while they're boring, they're big mega cap safe names. They're dividend payers. So I think you'll see that. And look, to your point, you haven't mentioned this yet, but if you look at the equal weight S&P, I think that's up 11% year to date or 10.5% year to date, which tells you everything, right? Because that just tells you if you look at the regular S&P, it's up 8.6, I think you said. So that tells you that money's moving out of some of those high growth names and back into other parts of the market. Again, that's a healthy sign.
I think the increase in yields, that's directly related to the jump in oil prices, isn't it?
100%.
But this is short-term stuff. I mean, a year from now, oil is going to be below 70. I mean, for sure, unless the war goes, completely sideways and badly and so forth. But these are not. I mean, I think these. I mean, probably be a good time to buy bonds. How about that? Go put your little toe in, buy some bonds because they got whacked.
I mean, I think you might get a little bit more pressure on bonds. To your point, if this drags on even longer, you're right, which I hope it certainly doesn't. I don't think it should, but you never really know. So you might get a little bit more downside pressure on bonds, which is going to push you a little bit higher. But yes, to your point, this might be a good time to start at least dipping your toes, right? Don't go all in necessarily, but you might want to dip your toes.
The dollar index 101.5. Dollar strong. Gold has been weak. Gold's just trying to cling to 4,000. But it was at 5,500, wasn't it? Not too long ago.
Yeah, about 4 months ago, right?
Right. So gold's really getting smashed. Silver's really getting smashed. That's a good sign. All right, I'm an old-fashioned guy. Yeah. I say precious metals. If that's the inflation warning or the high risk warning, all that stuff's coming down. The dollar's holding up. I mean, you want to see a collapse? Take a look at the Japanese yen. I mean, the Japanese. This is unbelievable. A dollar buys 163.85 yen. 163. That's unbelievable.
Right.
I remember when it was 100.
Yeah, 1.4.
I remember when it was lower than that. Nobody wants Japan.
And everybody was talking about gold and silver and some of those hideaway type names, right? I mean that's what it is.
Bitcoin.
And you take a look at that, and you look at Bitcoin.
Bitcoin
absolutely slammed.
Bitcoin. The past 52 weeks, Bitcoin is down 46%. 46%. Okay.
Yeah.
46%. All right. On that note, let's take a quick break. We'll come right back. Pete Najarian, Market Rebellion, and Option Monster. Kenny Polcari, Slate Stone Wealth. I'm Kudlow. We'll be right back. And we're talking stocks with Pete Najarian, co-founder of Market Rebellion and Option Monster. Kenny Polcari, chief market strategist at Slate Stone Wealth. So with higher oil prices, the Fed meets this week. I don't know if Kevin Warsh will even have a press conference because he doesn't like forward guidance. I think it'd be kind of cool if he didn't. But you've got speculation about the Fed raising rates. You think this is Ken Polcari? You think the Fed's going to raise rates? Pete Najarian, what do you think? Do you think the Fed's going to raise their target rates?
I don't. I don't. I think he's going to stay paused. And wanting. He's such an interesting guy, as you were mentioning. I mean, he may do this, he may not do that, and it'll be interesting. It's a different Fed now, and I think that with his leadership, I think that it's going to be very, very interesting going forward. And he's going with all the true numbers that we always hear and talk about. By the way, Larry, on a note that's very close to this whole thing with Warsh and everything else, but I mean, when we look at these earnings and how good they've been already and what these numbers look like, and you've got, a beat rate of 88% so far, that's not so bad, And it's one of those things where, I just keep looking at this going, well, people keep telling us things about the economy and so forth, but are they right or are they exaggerated? And I think in a lot of ways, when they're very negative about things, they're exaggerated and they're pulling from other areas. When we're getting these actual numbers, whether it's the revenue beats, which is at 85%, or the earnings beats, which is at 88%, or just the earnings growth, even close to 25% year over year, it sure does stand out for me. And that's why I think you want to be leaning, with the market, because that's why we're up here very much pushing on those 52-week highs. Look at all of the negative things that have been thrown at this market, and yet this is where we are right now. I mean, if you pulled away some of these things just a little bit, I think that you could say, well, you know what? This market actually is very strong, and it's very impressive so far, I think.
Well, when you look, it's a funny thing. So all the stock market and the earnings you're talking about, big numbers, big increases, big growth rates, is really corroborated by the incredibly low initial unemployment claims and the actual unemployment rate. And the numbers coming in, I mean, the June numbers for retail sales and almost everything else were very, very strong. So I don't think the Fed wants to get in the way of that. Just because of what I'm going to say is a temporary bump up in energy prices. I just don't think they will. Ken Polcari, real quick, the Fed moving this Wednesday? No? Yes? No?
No. Can you hear me? The Fed is not moving this Wednesday, and I'm with you. I don't think that Kevin Walsh is going to have a press conference, nor do I think he should, quite honestly. I know probabilities have gone up in September now, closer to 70% of a hike, but I think that's temporary. We'll see what happens over the next month.
I think it would be so cool if he didn't have a press conference at all. It would be like totally. That's swag, man. That's what I call swag.
Yeah.
All right.
100%.
Pete Najarian, terrific. Kenny Polcari, wonderful. Swag. The Republicans don't have any swag. We'll talk about that. Money in politics. Liz Peek and Steve Moore. Stay with us, folks. I'm Kudlow.